Quick disclaimer before we get into it. This is not financial advice, simply my journey in margin. Hey, welcome back to Leveraged Life. I'm Jason. This is episode 9, month 2 in the books. Let's start with the market because June was genuinely one of the most eventful months we've had. It opened with a bang. The US and Iran signed a peace deal, the Strait of Hormuz reopened, and markets ripped to start the week. The Nasdaq had its best single day since March. Then the Fed hit us with a curveball at Kevin Warsh's first meeting as chair. Rates held as expected, but the dot plot signaled a possible hike later this year. Markets sold off hard Wednesday, bounced back Thursday, then sold off again Friday. The chip trade was a story all on its own. Micron got crushed early in the month, then dropped a monster earnings beat that sent the whole sector ripping. Micron up 15%, SanDisk up 22%, the whole supply chain rallying with it. Meanwhile, megacap tech went the other direction. Apple fell hard after hiking hardware prices, dragging Microsoft, Nvidia, Amazon, and Meta down with it. Two completely different markets happening at the same time. Oh, and SpaceX had the biggest IPO in history, then gave back most of those gains by month end. On the macro side, the S&P 500 finished the first half of 2026 up 9.6%. The Nasdaq up nearly 13%, and the Russell 2000 surged 22%, its best first half since 1991. Not a bad backdrop despite the June noise. Now, the scorecard. Month 2 is in the books. Here's the full picture on an all-time basis. Total portfolio value at June 30th, $31,649. Cost basis, everything we've ever put in, $30,871. Net all-time gain, $778. That puts us at an all-time return of positive 2.52%, up from 1.61% at the end of month 1. The snowball is growing. On distributions, $177.42 received across 29 separate payments in June. Interest charged for the month, $81.88 at 3.95%. Net cash income, $95.54. And critically, distributions covered interest 2.16 times over. The one rule held. Let me show you what this looks like in Snowball Analytics, because the annualized picture is what makes this strategy click. Portfolio yield is sitting at 11.79%. Yield on cost, 12.06%. That translates to $3,722 in projected annual distributions. $310 a month on autopilot. And here's the snowball effect in raw numbers. May, the first full month of the series, we received $92. June, $177, almost double in a single month. Same strategy, just more capital deployed. The machine is scaling exactly the way it's supposed to. We deployed heavily this month, $14,400 in new capital across 27 holdings, a deliberately active month. 2 consolidation moves too. Sold USCL, rolled into HYLD. Sold ENCL, rolled into CMCC. Fewer tickers, more intentional positions. Margin health, excellent. 27% utilization, $42,000 in collateral above requirement. Plenty of firepower still available. And yes, prices pulled back across the board in June. The Iran conflict, the Fed noise, the megacap tech sell-off. But this strategy was never about short-term price movement. It was built for exactly this: distributions flowing in, interest covered, and buying the dips while the market is on sale. The July bounce is already showing that thesis playing out in real time. So that's month 2. 2.52% all-time and climbing. 29 distribution payments. Coverage ratio held. $310 a month in annualized income. Margin healthy. And the snowball is still rolling. Real trades, real stakes, no filter. That's leveraged life. I'm posting every morning before the bell on Instagram, Blossom, and X. Links below. Full breakdown on the website. See you next week. Take care of yourselves out there. Thanks for watching, it means a lot.